search assistant found a farmer's insurance office that you can buy with as little as $45,000 down and net $495,000 after making your loan payment. This assumes you use a 10-year, 11.5% interest, 2.5% down SBA loan to buy this $1.8 million business that's advertising $800,000 per year in annual cash flow. Now, we're covering this one because we get asked about these a lot, and I'm gonna say that I'm pretty skeptical of buying one of these offices. Now, one, it's the complete definition of buying a job, which honestly we have no problem with. I think it can be okay, it's completely fine to buy a job, especially when it makes $800,000 per year. I think just about everyone watching this right now would be happy to have a job that pays $800,000 a year. But because this is a job, not a business, the past success of the business, the $800,000 of cash flow, is from the work that the previous owner was doing. And the cash flow that you're gonna receive is gonna be based off of your skill as a salesperson. So it's gonna be different than the earnings of the prior owner because you're a different person, you have different levels of skills, versus maybe a business that's an actual operation with lots of employees and lots of other factors that drive the success. So in this example, in the listing, they say that this particular office has been in the top 1% for 3 years in a row. Now that's phenomenal, a super hard achievement. You know, it's really hard to run at that level of performance over time. So let's say you buy it and you're really good. You're way above average, you're in say like the 25th percentile. But the problem is the difference between the first percentile and the 25th percentile might be not making your loan payment on this business. And 25th percentile is really good. You're in a well above average salesperson. Now, on the plus side is business, it's gonna have a good book of clients. You're gonna have renewals that come up, kind of built in additional income that's gonna come in over the years. But the problem is that book is gonna run off because you're gonna have clients that are gonna shop around, and there's always gonna be a carrier that's gonna offer a cheaper rate to a new customer than typically what their current company is doing at renewal rates. So I'd say be very careful buying these. These are not for newbies. You need to be an experienced professional. You need to have an extremely strong sales background. This really shouldn't be your first job in the insurance industry. And we've never done one of these ourselves. I'm not sure we ever will. So I don't know how the bank is gonna look at this. When I put my credit hat on, I'm not sure this is a great credit that I would do even with the SBA guarantee. So I think that's something to keep in mind. You know, there might be a bank out there that can finance it, but I'm gonna guess you're gonna have a hard time. And I wouldn't expect to get the 2.5% down that we mentioned. Like I said, we don't know for sure what a bank's gonna require, but if I was the banker, I would ask for a very high down payment, and I would have very strict standards on who could buy this business. So check out our search assistant if you wanna find a business that fits your skills.